Imagine sending money from Ghana to Jamaica, instantly, securely, and without the costly middleman of foreign banks. That's the promise of PAPSS, the Pan-African Payment and Settlement System. But here's the real question. Can this revolutionary African fintech network connect with Caribbean systems to finally bring our people closer through finance? In today's video, we'll explore how PAPSS could transform cross-Atlantic trade, payments, and economic independence. 1. The architecture of dependence. To truly grasp the revolutionary nature of what is happening today, we must first fully deconstruct the oppressive financial architecture we've been forced to operate within. For generations, the entire mechanism of trade and finance between Africa and the Caribbean, and indeed with the world, has been built upon a single, non-negotiable pillar: the United States dollar. This isn't merely a convenience. It is a system of profound control, a deliberate architecture of dependence designed to ensure that value always flows through Western financial hubs. Let's illustrate this with a brutal example. A farmer in Kenya exports premium coffee beans to a distributor in Jamaica. The Jamaican importer must first go to their local bank, convert their Jamaican dollars into US dollars, paying a conversion fee. That sum of US dollars is then wired via SWIFT network, not directly to Kenya, but to a correspondent bank in New York City. This American bank acts as a mandatory middleman, holding the funds, taking a processing fee, and verifying the transaction. Only then does it release the funds to the Kenyan exporter's bank, which converts the now diminished amount of US dollars into Kenyan shillings, taking another fee. The entire process can take 5 to 10 business days. Up to 10% of the transaction's value can be eaten by fees and poor exchange rates. This is not inefficiency, it is a tax. A tax on our time, a tax on our productivity, and most cruelly, a tax on our unity. It is a financial mirror of the colonial trade routes that once forced all raw materials to flow to the metropole. This system ensures that our economies remain perpetually liquid poor, always waiting for payments to clear, always losing value to a network we do not control and cannot influence. It is the dollar's dictatorship, and its reign has stifled our potential for decades. But every dictatorship eventually faces its revolution. The spark of this financial revolution is PAPSS, the Pan-African Payment and Settlement System. To call it a new payment platform is to call the internet a new library. It is a catastrophic understatement of its transformative power. PAPSS is best understood as a sovereign financial central nervous system for the African continent, a digital infrastructure as critical as roads or ports, conceived by the African Export-Import Bank and launched under the auspices of the African Continental Free Trade Area, EFCTA. Its operational genius is breathtaking in its elegance and power. Here is how it works layer by layer. At its core, PAPSS is a real-time gross settlement system. When that same Kenyan coffee exporter now invoices their Jamaican partner, the Jamaican importer pays in Jamaican dollars directly into the PAPSS system through their local bank. PAPSS then performs its magic. It uses a sophisticated, transparent central liquidity mechanism to handle the currency conversion internally at a pre-agreed, optimal wholesale exchange rate and instantly, within 120 seconds, settles the payment by depositing Kenyan shillings into the exporter's account. The US dollar is completely cut out of the equation. The correspondent banks in New York City are made redundant. The result, 3 profound shifts that change everything. First, velocity. Transactions that languished for weeks now settle in under 2 minutes. This unlocks working capital, accelerates business cycles, and enables economic activity at a speed that can compete in the modern digital world. Second, sovereignty. For the first time in the post-colonial era, we are trading directly in our own currencies. The Nigerian naira speaks directly to the Ghanaian cedi. The South African rand does business with the Egyptian pound. This decolonizes the very mindset of trade, reinforcing the value and legitimacy of our own economic instruments. Third, efficiency. PAPSS slashes the cost of cross-border payments by over 80%. This is not a marginal savings. This is a monumental liberation of capital. Billions of dollars that once vanished into the pockets of intermediary banks now remain within our economies, available for reinvestment, for growth, for building our own futures. This is not an incremental upgrade. This is a quantum leap into a new financial reality. It is the most significant act of economic self-determination in Africa since the political independences of the 1960s, and it's live, operational, and processing transactions right now, rewriting the rules of African trade in real time. What you are watching is the single biggest financial story of the decade, and it's not being covered by mainstream media. This is why we built Africa's Lost Heritage. If you believe this narrative needs to be told, become a part of our community. Hit that subscribe button and the bell icon right now. We are just getting started on this journey, and the next part is even more critical. 3. The technical bridge to the Caribbean. PAPSS's success within Africa is the undeniable proof of concept, but its world historic potential is activated only when this digital bridge is extended across the Atlantic Ocean to the Caribbean. The vision is both audacious and technically feasible. The seamless integration of the PAPSS infrastructure with the Caribbean's own financial messaging and settlement systems. The groundwork for this is already being laid. High-level technical committees involving Afreximbank, the CARICOM Secretariat, and the Caribbean Development Bank are actively engaged in dialogue. The goal is interoperability, creating a secure, standardized API-driven interface that allows the Pan-African payment and settlement system to communicate directly with the Caribbean's proposed Pan-Caribbean Settlement Network, or similar infrastructure. This isn't science fiction, it's systems engineering. It requires aligning regulatory frameworks, ensuring cybersecurity protocols match, and building trust between central banks. The benefits would be nothing short of transformative. Imagine a single unified digital payment platform for the entire global African diaspora, a network encompassing nearly 2 billion people from Cape Town to Cairo, from Kingston to Port of Spain. A Barbadian software company could pay its remote developers in Nigeria in real time. A Ghanaian cocoa processor could instantly pay a Dominican supplier. This connection would do more than facilitate trade. It would unleash a tsunami of fintech innovation. African payment giants like Flutterwave, Interswitch, and M-Pesa could expand their services seamlessly into Caribbean markets, bringing with them battle-tested solutions for mobile money and digital banking. Caribbean financial technology firms would find a massive new market for their services on the African continent. This digital bridge is the most critical, non-negotiable infrastructure project for the economic unity of the diaspora in the 21st century. It is being built not with concrete and steel, but with code, cryptography, and a collective will for sovereignty. 4. The ripple effects, remittances, investment, and sovereignty. The impact of a successfully linked Afro-Caribbean financial system extends far beyond the obvious benefit of streamlining business transactions. Its secondary and tertiary ripple effects will fundamentally reshape our economic realities in 3 profound ways. First, it revolutionizes remittances. The Caribbean is one of the most remittance-dependent regions on Earth, with funds from abroad constituting a lifeline for millions of families. The current system for sending these remittances is notoriously exploitative, with fees often soaring over 10%. A linked PAPSS system could provide a direct, low-cost corridor for remittances. A nurse in London wanting to send money to her family in Jamaica could do so through an app connected to this network, having her British pounds converted instantly into Jamaican dollars at a fraction of the current cost. Her hard-earned money maximizes its impact back home. Second, it supercharges intra-diaspora investment. The biggest barrier to investment within the diaspora has always been the friction and fear of moving money. With that friction gone, the floodgates open. A venture capital fund in South Africa can effortlessly seed a tech startup in Trinidad. A Jamaican investor can confidently finance a hotel project in Ghana. A Nigerian angel network can back a promising edtech company in Barbados. This creates a powerful internal cycle of capital where wealth generated within the diaspora is reinvested within the diaspora, building our own enterprises and solving our own challenges without first seeking permission or partnership from foreign institutions. Third, and most importantly, it creates unparalleled monetary sovereignty. By drastically reducing our collective reliance on the US dollar for intra-diaspora trade, we inoculate our economies from external shocks.
we weaken the impact of U.S. inflation and geopolitical decisions on our local markets. Our central banks regain greater control over their monetary policies and currency stability. The constant drain of foreign exchange reserves to facilitate dollar-based trade is slowed, preserving those reserves for true strategic imports. This is about more than efficiency. It is about power. It is about finally possessing the autonomous financial tools to build the future we envision for ourselves, completely independent of the archaic systems that were designed to hold us back. The scale of this is staggering. We are building the financial equivalent of a new nervous system for 2 billion people. If you're understanding the magnitude of this shift, please let me know by hitting the like button. It helps more people find this crucial information. And what do you think the biggest impact will be? Let me know in the comments. 5. Navigating the challenges. The road to integration.
The path to full financial integration is not a simple one. It is a complex marathon of technical, regulatory, and political hurdles that must be meticulously navigated. The first challenge is technical compatibility. Ensuring the PAPSS platform can communicate seamlessly with existing and future Caribbean financial infrastructures requires immense software engineering skill and rigorous testing to guarantee security, stability, and scalability. A single vulnerability or system failure could shatter the hard-won trust in this new system. The second challenge is regulatory harmony. This project requires the alignment of banking regulations, anti-money laundering AML protocols, and know your customer (KYC) standards across dozens of sovereign nations with different legal traditions and regulatory philosophies. This demands unprecedented levels of diplomacy and cooperation between central banks and finance ministries. The third challenge is political will. While the vision is clear, maintaining the sustained political momentum across election cycles and changing governments in over 40 countries is a monumental task. There will also be resistance from powerful entrenched interests, the large multinational banks and money transfer operators who profit handsomely from the inefficiencies of the current system and will lobby against this threat to their business model. However, the momentum is undeniable. The resounding success of PAPSS in Africa is the ultimate proof of concept, providing a tangible working model that silences skeptics. Every transaction that flows seamlessly from Senegal to Zambia builds irrefutable evidence for its expansion. The leaders driving this vision understand that the triumph will not be a single headline-making event, but a series of quiet victories. A small business owner who can now compete internationally, a student who can pay for tuition abroad without hardship, a diaspora family that keeps more of its remittances. This is how the future is built, not all at once, but one secure, instantaneous transaction at a time. 6. A call to the architects of the new future. This financial revolution will not be built by politicians and bankers in closed-door meetings alone. It will be built in the open. It will be built by us, by the software developers across Lagos, Bridgetown, Nairobi, and Kingston who choose to dedicate their skills to writing the code that connects these systems, by the entrepreneurs and business leaders who boldly build their ventures on this new infrastructure, creating the apps and services that will define this new era, by the economists and thinkers who develop the new models and theories for a post-dollar diaspora economy, by the consumers and citizens who actively choose financial services that empower our communities rather than exploit them. The tools are being handed to us. The digital highway is being paved before our eyes. The question is no longer if this future is possible, but what we will choose to build upon it. This is a call to every visionary, every innovator, every dreamer across Africa and the Caribbean. Step forward and become an architect of this new reality. The opportunity to actively shape the economic destiny of nearly 2 billion people is more than a historical moment. It is our historical responsibility. The era of financial colonialism is drawing to its final close. The era of our financial sovereignty is dawning. Let's build it. This is the foundation. But what about our culture? The financial system is just the engine. Our creative spirit is the fuel. To see how music, film, and art are building a new cultural economy, watch our next video right here. Subscribe to Africa's Lost Heritage. The story of our renewal is just beginning.